Hello and welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Economic Corner show where we update you on all the biggest global economic announcements. Today on the Economic Corner, it's a data-heavy day with key economic data announcements coming from all across the globe. First up, the Reserve Bank of Australia's monetary policy decision. At its meeting today, the board decided to maintain the current policy settings as expected by the markets of 10 basis points for the cash rate, the yield on the 3-year Australian government bonds, the parameters of the government bond purchase program, and the rate of 0% on the exchange settlement balances. Governor Phillip Lowe says that the global economy is continuing to recover from the pandemic and the outlook is for strong growth this year and next year. The recovery remains uneven though, and some countries are yet to contain the virus. Global trade in goods has picked up strongly and commodity prices are mostly higher than at the start of the year. However, inflation in underlying terms remains low and below central bank targets. Sovereign bond yields have been steady recently after increasing earlier in the year due to the positive news on vaccines and the additional fiscal stimulus in the United States. Medium-term inflation expectations have lifted from near record lows to be closer to central banks' targets. The 3-year government bond yield in Australia is consistent with the board's target, and lending rates for most borrowers are at record lows. The Australian dollar remains in the upper end of the range of recent years. The economic recovery in Australia is stronger than earlier expected and is forecast to continue. The bank's central scenario is for GDP to grow by 4.75% over this year and 3.5% over 2022. This outlook is supported by fiscal measures and very accommodative financial conditions. An important ongoing source of uncertainty is the possibility of significant outbreaks of the virus, although this should diminish as more of the population gets vaccinated. Progress in reducing unemployment has been faster than expected, with the unemployment rate declining to 5.5% in April. Job vacancies are at a high level and a further decline in the unemployment rate to around 5% is expected by the end of this year. There are reports of labour shortages in some parts of the economy. Despite the strong recovery in the economy and jobs, inflation and wage pressures are subdued. While a pickup in inflation and wages growth is expected, it is likely to be only gradual and modest. In the central scenario, inflation in underlying terms is expected to be 1.5% this year and 2% in mid-2023. In the short term, CPI inflation is expected to rise temporarily to be above 3% in the June quarter, because of the reversal of some COVID-19 related price reductions. Housing markets have strengthened further, with prices rising in all major markets. Housing credit growth has picked up with strong demand from owner-occupiers, especially first home buyers. There's also been increased borrowing by investors. Given the environment of rising house prices and low interest rates, the bank will be monitoring trends in housing borrowing carefully, and it is important that lending standards are maintained. As foreshadowed last month, at its July meeting with the board, it will consider whether to retain the April 2024 bond as the target bond for the 3-year yield target or to shift to the next maturity, which is the November 2024 bond. The board is not considering a change to the target of 10 basis points. At the July meeting, the board will also consider future bond purchases following the completion of the second $100 billion of purchases under the government bond purchase program in September. And now, before I share some more important data released by the RBA, it's time for a short break. Stay tuned to not miss the latest trending news.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts. Our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. Kalkine TV.
Hello and welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Economic Corner Show. We're discussing important data released after the Reserve Bank of Australia's monetary policy decision. The RBA board continues to place a high priority on a return to full employment. The date for final drawings under the Term Funding Facility is the 30th of June. So far, authorised deposit-taking institutions have drawn $134 billion under this facility, and a further $75 billion is available. The facility is providing low-cost fixed-rate funding for 3 years, and so will continue to support low borrowing costs until mid-2024. The board is committed to maintaining highly supportive monetary conditions to support a return to full employment in Australia and inflation consistent with the target. It will not increase the cash rate until actual inflation is sustained within the 2 to 3% target range. For this to occur, the labour market will need to be tight enough to generate wages growth that is materially higher than it is currently. This is unlikely to be until at least 2024 at the earliest. Moving on now, Australia's central bank left its cash rate at record lows for its sixth straight meeting on Tuesday, even as data showed the country's economic output was likely back to its pre-pandemic level, while housing prices were shooting through the roof. The Reserve Bank of Australia left its policy settings at 0.1% as it awaits inflation and wage pressures. The outcome was expected unanimously by economists polled by Reuters. The Reserve Bank of New Zealand last week hinted at the end to a pandemic-era ultra-loose monetary policy, leading some to believe the RBA would venture on that path too. Governor Phillip Lowe instead justified the need for near-zero rates despite a strong economic recovery by saying inflation and wage pressures are subdued. The RBA also repeated it will not raise interest rates until inflation was sustainably within its 2 to 3% target band. Under its central scenario, underlying inflation is seen below the midpoint of that range through mid-2023. This is despite economic data pointing to a surge in activity. Separate figures showed Australia's home value index jumped 10.6% in May from a year ago to clock its strongest annual growth rate in almost 11 years. First quarter GDP data is due at 12:30 GMT on Wednesday. And now, before I share some more important announcements from Australia, it's time for a break. Stay
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts. Our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. Kalkine TV.
Hello and welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Economic Corner Show. Let's look at the other key announcements from Australia. Australian public sector spending was flat in the March quarter as the federal government began to wind back some pandemic stimulus measures, while state governments ramped up investment spending. The Australian Bureau of Statistics reported that spending on operational items fell 0.5% in the first quarter from the previous quarter to an inflation-adjusted $80.79 billion. Investment in fixed assets by governments and public enterprises rose 2.9% to $26.95 billion. The ABS says the 0.1% increase in total public sector demand was expected to make no contribution to real gross domestic product in the quarter. Analysts forecast GDP rose by around 1% in the first quarter, returning to where it was before coronavirus lockdowns tipped the economy into a recession. Next up is the Australia's balance of payments data for the March quarter released by the Australian Bureau of Statistics. The ABS shared on the 1st of June that Australia's current account surplus has risen $2.3 billion to a record $18.3 billion in the March quarter. The current account surplus was driven by a record $5.2 billion increase in the balance on goods and services surplus. Exports of goods and services climbed $7.8 billion, while imports of goods and services grew $2.6 billion. Net primary income deficit increased by $3.1 billion to $6 billion in the March quarter. Financial account deficit increased by $4.7 billion to $15.2 billion. Australia's net IIP liability position was $874.6 billion at the 31st of March. The Bureau says net exports could detract 0.6 percentage points from the first quarter gross domestic product, which is due on Wednesday. Meanwhile, Australian consumer confidence declined 2.5% last week as a 7-day COVID lockdown was announced in Victoria on May the 27th. Counterintuitively, confidence was down by more in Sydney than Brisbane and Brisbane than it was in Melbourne. All of the confidence sub-indices fell. Current financial conditions fell by 3%, while future financial conditions softened 2.4%. Current economic conditions lost 0.5% and future economic conditions dropped 4%. Time to buy a major household item weakened 2.6%. Weekly inflation expectations increased by 0.2 percentage points to 3.9%, pushing the 4-week moving average up 0.1 percentage point to 3.8%. And now, before I share some more important announcements from Australia, it's time for a short break. Stay tuned.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Hello, welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Economic Corner Show. Let's look at the latest news on the housing sector performance now. The housing prices in Australia continue to rise after the pandemic as CoreLogic's National Home Value Index edged up 2.2% sequentially in the month of May. The growth was led by the capital cities as they outpaced the regional markets. The capital city index at a combined level grew by 2.3% during the month compared to a 2% rise across the combined regional areas. The 2.2% rise is 40 basis points higher than the growth clocked in April. In April, National Home Price Index had risen by 1.8% after the 32-year high growth recorded in March. CoreLogic's research director Tim Lawless says that the values were up by more than 1% across every capital city over the month, with both house and unit values lifting across the board. Of the 334 statistical areas sub-regions analysed by CoreLogic, 97% had recorded a lift in housing values over the past 3 months. Such a synchronised upswing is an absolute rarity across Australia's diverse array of housing markets. The monthly change in dwelling values in May ranged from a 1.1% rise in Perth to a 3.2% jump in Hobart. Across the non-capital city regions, regional New South Wales led monthly gains of 2.5%, while values in regional Western Australia saw house prices correcting by 10 basis points. The number of dwellings approved fell 8.6% in April, following an 18.9% rise in March. The Australian Bureau of Statistics data suggested that the fall in the total number of dwellings approved in April was driven by private sector dwellings excluding houses, which fell 28.6%. The value of total building approved decreased 22.6%. Moving on now to data coming in from New Zealand. ANZ Business Outlook Survey analyses the course of the economy in the next year and shows how business confidence is stacking up, what export sales are up to, and how the labour market is doing. The survey collects crucial economic data which relies on the inputs of New Zealand businesses that has proved good in accurately choosing economic trends. The latest ANZ Business Outlook survey for May revealed that the New Zealand economy was grappling to keep up with demand, while cost and inflation pressures continue to build up. Headline business confidence fell 5 points to 2%, while businesses' own activity was down 5 points to 27% when compared to May preliminary readings. Though business sentiment and activity indicators were lower in the second half of the May sample, all indicators for the month as a whole were still higher than that of April. According to the survey, the majority of the second half of May responses were received on the budget day morning. Although the contents of the budget were unknown at that time, it's plausible that the numbers were influenced by uncertainty. And now, before I share some more important announcements from around the globe, it's time for a short break.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Hello and welcome back. I'm Rachel. You're watching Kalkine TV live from Sydney. This is the Economic Corner Show. Let's look at the latest numbers on Japan's PMI numbers. Japanese manufacturing firms continued to indicate a moderate improvement in operating conditions in May as demand conditions continued to improve in the latest survey period. Manufacturers were encouraged to take on additional staff for the second month running. Businesses also remained optimistic regarding the year-ahead outlook for activity, with positive sentiment at the second highest level in the respective index's 9-year history. The headline, AU Jinbun Bank Japan Manufacturing Purchasing Managers Index, that's a composite single-figure indicator of manufacturing performance, edged down from 53.6 in April to 53 in May, signalling a softer but still moderate improvement in the health of the manufacturing sector. The latest increase extended the current sequence of expansion to 4 months and highlighted a sustained turnaround for the Japanese manufacturing throughout 2021 following COVID-19 related disruption last year. New orders among Japanese manufacturers also rose further. The overall pace of expansion dipped in comparison to April and was only modest overall. Respondents linked higher sales to greater client confidence for tools and machinery. Foreign demand for Japanese manufactured goods remained in expansion territory in May, with firms citing stronger demand in key markets, notably China. Looking ahead, business optimism rose at Japanese goods producers as firms continued to forecast a rise in output in the coming year. Manufacturers predicted that a wider economic recovery from the pandemic would boost demand. Meanwhile, Canada's current account balance on a seasonally adjusted basis posted a $1.2 billion surplus in the first quarter after recording a $5.3 billion deficit in the fourth quarter of 2020. This was the first surplus since the third quarter of 2008. The surplus in the first quarter mostly reflected the first positive trade in goods and services balance since 2008, which was partially offset by a lower investment income surplus. The goods balance posted a slight surplus in the first quarter. Meanwhile, the services balance remained in an unusual surplus position in the context of the COVID-19 pandemic. The trade in goods and services balance recorded a $2.1 billion surplus in the first quarter, the first positive balance since 2008. This surplus was led by higher exports of goods. Meanwhile, the trade in services balance remained in an unusual positive position from a historical perspective. Exports of goods were up by $11.8 billion to $152.7 billion in the first quarter. And now, before I share some more important announcements from around the globe, it's time for a short break.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Hello, I'm Rachel and you're watching Kalkine TV from Sydney. This is the Economic Corner Show. Let's now look at the latest news from Canada. Prices for products manufactured in Canada, as measured by the Industrial Product Price Index, rose 1.6% month over month in April and 14.3% compared with April 2020. Prices of raw materials purchased by manufacturers operating in Canada, as measured by the Raw Materials Price Index, increased 1% on a monthly basis in April and 56.4% compared with April 2020. The Industrial Product Price Index posted its fifth consecutive monthly increase in April. Excluding energy and petroleum products, it was up 1.8%. Of the 21 major commodity groups, 18 were up and 3 were down. Next up is inflation numbers from Germany. The inflation rate in Germany, measured as the year-on-year change in the Consumer Price Index, is expected to be 2.5% in May. Based on the results available so far, the Federal Statistical Office also reports that the consumer prices are expected to increase by 0.5% in April. The current coronavirus crisis caused some price collection problems again in April, as some products were not available in the market. Moving on to economic numbers from India. India's economy expanded 1.6% year on year between January and March, in a sign economic activity was recovering steadily before the country was battered by a second wave of coronavirus infections in April. The expansion followed 0.5% year-on-year growth between October and December, when Indians began to cautiously venture out for the traditional festive season after a lockdown during the spring and summer last year. Over the full financial year from April 2020 to March 2021, India's gross domestic product narrowed 7.3%, its worst performance in 4 decades. Now, from economic data announcements, let's move on to some other major economic updates for the day. Trade Minister Damien O'Connor will lead an innovative virtual trade mission to Japan this week to promote New Zealand's valued relationship with one of its largest trading partners. He'll be joined on Friday, the 4th of June, by business leaders from New Zealand's premium food and beverage, health technology, consumer tech and renewable energy sectors. He said Japan is one of New Zealand's largest trading partners and one of its longest-standing international friends. The decision to do this virtually in COVID times reflects how significantly the New Zealand government regards this relationship. This mission supports the government's efforts to strengthen key relationships and sees new opportunities for trade and investment under the Trade Recovery Strategy. Having Japan as a key economic partner supports the diversification of New Zealand's trade and foreign direct investment profile. The virtual trade mission to Japan is part of a series of high-level engagements including recent online meetings between Damien and his Japanese counterpart, Minister Kajiyama Hiroshi, on the 24th of May, with Japan's CPTPP Minister Nishimura on the 19th of May. Damien also spoke to the Nikkei Future of Asia conference on the 21st of May about a regional economic recovery from the pandemic. Delegates from both countries will explore opportunities to work more closely with each other through targeted discussions, market intelligence updates and keynote addresses. Now, before we go to some more announcements, let's move into a short break.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Hello, I'm Rachel and welcome back. You're watching Kalkine TV live from Sydney. This is the Economic Corner Show. Let's look at the latest news from China now. The country announced on Monday that each couple would be permitted to have up to 3 children, a major policy shift from the existing limit of 2 children, after recent data showed a dramatic decline in births in the world's most populous country. The change was approved during a Politburo meeting chaired by President Xi Jinping in 2016. China scrapped its decades-old one-child policy, initially imposed to halt a population explosion with a 2-child limit, which failed to result in a sustained surge in births as the high cost of raising children in Chinese cities deterred many couples from starting families. Early this month, China's once-in-a-decade census showed that the population grew at its slowest rate during the last decade since the 1950s, with data showing a fertility rate of 1.3 children per woman for 2020 alone, on par with the ageing societies like Japan and Italy. And lastly, Scott Morrison has warned that Beijing is attempting to undermine the close relationship between Australia and New Zealand amid growing tensions in the Asia-Pacific. Following talks with his New Zealand counterpart on Monday, the Australian Prime Minister says there were those far from here who were trying to weaken the security partnership between Canberra and Wellington. Mr. Morrison insisted they would not succeed, adding that Australia and New Zealand would never trade their sovereignty or values. He made this statement while answering a question about whether Australia or its Five Eyes intelligence partners, that's the US, Canada, New Zealand and the UK, could depend on Wellington. Mr. Morrison chose not to name China directly when asked which forces far from here were attempting to divide the Allies. That's all from the Economic Corner for today. Today was a very data-heavy day. Stay tuned for more of the latest news and market updates. My colleague Sage will be here very shortly with the market close report for today.